Break.
All right, this is followmetrades.com, Real Traders Club live session on Monday, April 3rd, 2023. And lots going on in the markets. Let's jump into it. As always, good place to start, CNBC dashboard. See what the markets are doing here at the open of the week. Any major headlines? Dow is up. I'll call it 1%. S&P 500 about 0.28. NASDAQ is actually down. Headline here, NASDAQ falls to start the second quarter of trading as oil spikes higher. And that's probably the biggest news. OPEC Plus just made the Fed's job more complicated. Here's why they did it. Oh, excuse me. Tried to mute before I sneezed. All right, so oil spiking. And as always, the headlines are, what's being written tells you as much about what's going on as what they're actually writing, if that makes sense. Let's go look at oil, because that's the biggest news. So it is a big spike, right? Overnight, it was up over 8%. It's up 6.61% to 80.67. So what's the context on that? I always, when you get a big move, you get big news, I always go, I always want to go look at a chart. Here's a chart. Oh, well, look. Here we are at 80 bucks, right? Down from the high of over 120 last summer. So that's a big one-day jump, and it's because OPEC is cutting production. I see also that Japan kind of broke with the rest of the, its allies, and is going to buy oil from Russia at 60 bucks a barrel. Pretty big discount, but not making their friends happy with that, right? Kind of breaking ranks with the sanctions. But so oil's up. If you look, it's coming up to this. Look at this line here. It's been here, pretty much this whole year, right around 80 bucks, right? Up to it, pull back, up to it, pull back, up to it, pull back. Here it is, up to it again. So even though that's a big one-day spike, if you just look at an average, that price for oil isn't that high. And as I looked at this graph before we started the session, what annoyed me was, here's the peak from the summer, 120. It lost nearly half, right down below 70. Well, I didn't see it drop that much. It dropped a little, but not that much, not even close. We're
So
still
the cutback's going to be 1 million barrels a month till the end of the year. So we'll see how this affects it long term.
And percentage wise, that's not much, really. So that's just a little bit of context and perspective on it there. And go back to the dashboard. Here's a couple other interesting articles. Here's the OPEC, right? Surprise, right? We're going to cut production. And then, if you've been tuned in for any period of time here, I've questioned the the banking crisis. You keep hearing about the banking crisis, and my challenge to that is I don't think we had a crisis. And here's an article. You don't even have to read the articles from Seeking Alpha, or just read the headline. Smaller banks gain deposits, bucking the deposit run narrative. Because there was, there's a run on the banks. Everybody's pulling their money out. Smaller banks getting hit hard. The truth, the data, is their deposits are increasing. How about that? There was no crisis. A couple banks had trouble. All right, S&P 500 daily chart. Well, the power of the wedge continues. We had this breakout last week from this wedge. We pointed out breakout here, and the momentum just continues. And interestingly, and the White House has commented on this, despite the fact that their previous narrative was that using the stock market as a gauge of success was not good when they were criticizing the prior administration, but now here's the start of the year price of the S&P 500. You see we're up for the year. So the White House is taking that as a win, despite prior narrative. And it's true, it's up for the year. But I always like, again, what's the perspective here? Let's get the big picture, right? Oh, down significantly from the peak. Right, so the peak on the SPY was 480. Here we are down at 410. So there's that. That's the reality. But we are in this uptrend, and that's for sure, right? We had the big run up from the pandemic. Beautiful bull market, pretty choppy correction, and all signs are that it is perhaps over and heading back up. Pretty nice move here. High, higher, low, high. Took out this high, got this one coming up. So currently in a uptrend. And from a longer term Elliott wave standpoint, it looks like we could be in the next bullish leg. Eventually, maybe up to new highs. Won't go straight up. It'll take some time, and things could disrupt that, but we'll keep watching it. So that is the overall market narrative, right? Markets heading up. The banking crisis, there wasn't, and oil spiking, driving headlines, but really coming back to kind of a normal level that we've seen. I'll show that chart one more time. Pretty normal level that we've seen over the last over this year, right, up to this about $80 level. All right, it's always good to look kind of beyond the headlines. That's the big picture. No big major economic news coming up this week. That's some, JOLTS job openings. End of the week, we got ADP predicting the employment change, and then the official government report, right? And I think we're a little bit less in the Alice in Wonderland world of good news is bad news, right? I think good news will just be good news. So if jobs continue to grow, that's good news. So that's the overall look at the markets. In conclusion, what does that mean? How do we trade that? How do we make some money, make some profit? I think there are sectors that are doing well. Chips seem to be recovering. Energy, I don't think we're going to chase that again. We're up unless it breaks through that $80 level. So it's really chips look good. I think the bank recovery looks good. We're in that. And then individual stocks that are just kind of got their own thing going, their own good news or bad news, long or short, and we're just going to take those individual opportunities, right? And perhaps a longer term play on the overall market, the S&P 500 long. So that's the summary of today.